Welcome to Insured Investors, where we share practical real estate investing tips with an insurance twist. I'm your host, Brooke Beats. Let's get started. Real estate investors typically experience a property loss at least once in their career. And when it comes to filing an insurance claim for that loss, it can be complex and overwhelming. So today, our favorite claims expert, Zach Baker, is back to share what every real estate investor should know about insurance claims. We're discussing if filing claims impacts your premium, how to avoid claim denials, and more. So let's get into it. Welcome back.
Hello.
Hello. Okay, so the million question that everybody has. Does filing a claim impact your insurance premiums?
So the answer is the answer that nobody likes, which is sometimes. So there's a lot of factors that go into premiums, and that's what makes it hard and tricky for people. The thing you want to remember is that insurance at its core is just a transfer of risk. You're paying your premiums, the carrier's collecting premiums, and in return, they're taking risk away from you. And so when you're filing claims and they're paying claims out, at some point the carrier will likely try to reevaluate, hey, is the premium we're collecting from you sufficient for the claims that we've been paying and the risk that we've taken from you? So at its core, that's what you're trying to evaluate, and that's what you want to be aware of. So if you file a claim where no payment is made, the carrier likely won't, there likely won't be an impact to your premium because the carrier won't have to really reevaluate what the premium they're collecting from you. But what you want to avoid doing, though, is filing a lot of claims where no payment is made because it's not just the quantity of payments made by the carrier for the risk, it's the quality of the risk as well. And so if you file a lot of unnecessary claims, at some point the carrier is going to wonder, are you a desirable risk or not, even if they don't pay anything. So it's not just whether there's a payment made, but it's also the frequency, and especially frequency, of unnecessary losses that you want to be aware of. And those are the things you want to have in mind when you're trying to decide if you want to file a claim or not.
Okay. So what would insurance companies consider an unnecessary claim to file?
So the way I would think through that is that's basically any claim where you really didn't need to involve insurance in the first place, where they go through the investigation, there's no claim payments, there's no benefit to you as the insured. There's a lot of examples of those. One is where the damage is right at or below your deductible. They're going to do the investigation, they'll write the estimate, but there's still no payment because the damage is below your deductible. Another one is where the damage is caused by a peril that's not covered on the policy. If you have a policy where water damage isn't covered and you file a water claim, they're going to file the claim, they're going to investigate and turn right around and say water is denied. So it's really those types of claims where you involve the insurance company, where you didn't need to, and there's no payment made. The other types you want to be aware of that are kind of unnecessary are claims where you file just to see if you have damage. You really want to avoid using your insurance company to decide if you have damage to begin with. We'll sometimes see a storm will roll through an area, and a client may think, I don't know if I have wind or hail damage to my roof, I'll file a claim and find out. You really want to avoid that if you can. Maintenance type claims or frequent controllable losses you want to avoid if at all possible, just because those are that really more in the sphere of you as a homeowner maintaining the property. So all of those types of claims I would bucket as unnecessary. You want to avoid those if you can.
So in those scenarios, would it be best to advise the investor to contact their agent to kind of talk through, like, this is what I'm seeing, this is what potentially could be it, like, where do I stand on filing a claim?
Yeah, you want to find a good resource, whether it's your agent or if you have a contractor, somebody who you can work through the particulars of what's going on, have them evaluate the damage, is it sufficient, and yeah, really kind of talk through it, and then decide whether you want to file a claim or not. You don't want to make your insurance carrier or a claim the kind of first step of that process.
Yep. Okay. What is a controllable loss? Like, what can the investor do to try to mitigate any of that?
So a controllable loss is really a claim that you file where maintenance is a component of it. So some common examples are, like, if you have a pipe that bursts because it freezes. Okay, great, take care of that, and then at that point there's an issue, so it's your responsibility as the homeowner or the property owner to do something about it. So add insulation, move the pipe, do something that will prevent it from freezing again in the future. Yep. Or if you have a tree branch that falls on your house, evaluate the tree. Do we have to take other limbs down? Do we need to take the whole tree down? So those are all maintenance type things that property owners are responsible to do. And what an insurance carrier will look at is, hey, are we seeing a lot of these types of claims that could reasonably have been prevented with routine maintenance? So if you have a pipe burst claim and then you have another one the next year and then another one the next year, at some point the insurance carrier is going to, again, look at your desirability of risk and say, hey, are they doing their job as a property owner? The claims may get paid and they may get covered, but again, it's desirability of risk, and the carrier may wonder if you're a desirable risk because you continue to have these frequent losses that could be controlled through regular maintenance. So that's something you want to be aware of as well.
Because we know insurance is not a maintenance plan.
It is not. And
Yes.
you never want to treat it like one.
No. Why do claims get denied?
So there's a lot of reasons. It's basically, at its most core, it's the policy provisions are going to decide whether a claim is covered or not. So you've got losses where a peril that causes the damage is excluded on the policy. It's probably the most common. If you have wear and tear over time, or mold, or if it's flood on a basic property policy, those types of perils the policy doesn't cover. And so if you file a claim for those things, you're likely going to get denied. The other big one that we'll see a lot is just kind of the policy setup. You don't pay your premiums on time, so you don't have a valid policy. Or if you wait too long to file a claim, some your policies have a timeline of how long you have to file a claim. If you wait too long, that claim may be denied. But other than that, it's really, like I say, like policy setup and information. You want to make sure that your policy has the right information, is set up in an accurate and correct way. If it's not, for some reason, there's a chance your claim could be denied, or the policy could be invalidated altogether. So you want to be careful about that. The last one, the big one, is just if you are committing fraud or if you're misrepresenting in some way, that claim is likely going to be denied.
Yep.
But usually it just has something to do with the policy setup itself or the policy provisions, and that will decide whether the claim is covered or denied.
Okay, so let's talk a little bit more about policy information. What are some scenarios or examples that investors need to keep in mind?
So the biggest, most important is who you have listed as the named insured. The named insured always needs to be the legal owner of the property. Because the big thing the carrier is going to look at is do you have an insurable interest in this property? And so if you have the property is owned by one entity and it's insured under another entity, then there's an insurable interest problem there. And again, it could invalidate the entire policy. It could lead to a claim denial. And you don't want to wait until you have a loss to find out, oh, your policy is not set up correctly. So the kind of classic example of somebody inherits a property from a relative, and then they title it in their name, but they leave the insurance on the relative that's going on the relative's name. As soon as the transfer of title happens and now I'm the legal owner of that property, my relative's insurance becomes invalid. They no longer have an insurable interest in the property. And so if I'm relying on my relative's insurance to cover my claims, I'm in a huge risk because that's likely not going to happen.
Yep.
So the named insured is the most important. The owner of the property needs to be the named insured on the policy to avoid any issues with insurable interest. The other ones are additional insureds. You want to make sure that you've got all parties represented appropriately, mortgagees, anyone else with a financial interest in the property. Because again, insurance is transfer of risk, so you want to make sure you transfer everyone's risk appropriately. So you don't want to leave people off or have the wrong parties on there. The other big one is just occupancy or just status of the property. Is it vacant? Is it under renovation? Is it occupied? You want to make sure that that's all accurate because that will determine and can affect how claims are, the coverage on a claim is evaluated depending on the status of the property. So you want to make sure that's always accurate as well.
Okay. So all this is great information. Let's recap a little bit. What are some things that investors should not do when filing a claim?
So if you learn anything, it's don't file unnecessary claims. Evaluate with a trusted professional. Is there damage? Is the damage above my deductible? Is the damage from a covered cause of loss likely? Then I'm going to file a claim. That's when you want to file the claim. You want to do that homework before you do it. That's probably the biggest pitfall is people filing unnecessary claims and using the insurance carrier to decide should they file a claim or not. So you want to avoid that if at all possible. You also, again, with the controllable losses, you want to avoid and don't lack on maintenance or don't, not take the necessary steps to maintain your property, do the necessary updates, prevent controllable losses. You want to avoid those if at all possible. The other thing is just kind of taking a just generally passive approach to how your policy is set up, not checking to see if the named insured is right, not checking to make sure that all the proper entities are on there. You want to step towards your policy, and people are afraid or they feel ill-equipped, but it's really important that you take ownership and empower yourself. You don't want to take a passive role when it comes to how your policy is set up.
And really understanding the coverages that the policy provides, right? So knowing if you have flood, knowing if you have water, knowing if you have theft, all of those.
Yeah, it's all about being in the empowerment space. You want to empower yourself to understand what your policy does do and what risk you have transferred. If it's a risk that you can reasonably know that has not been transferred to the carrier, there's no reason to involve them. Take care of that on your own.
Yep. Okay, so you just covered things that they should not do. What are some highlights of things that they should do?
In some ways, the opposite of what they shouldn't. They should take an active, empowered role in how their policy is set up. They should review their policy paperwork regularly to see is the named insured correct, are my additional insureds correct, has my mortgagee changed in some way. You really want to step towards all of that. So that's something they definitely should do. Beyond that, when you do have a loss, you really want to do your best to document the state that it was originally in when you experienced the loss. It can sometimes take a carrier a little bit to get out to do the actual investigation or the inspection. So take photos, do video if you can, get expert opinions if that's helpful. You really want to kind of get a good snapshot of what the damage looks like when it happened. It's super helpful for the carrier, and it can also be helpful for you if down the road you're trying to figure out what type of repairs you need to do, or you're working with a contractor, they may want to see the original state. So document at the beginning as much as you can. The other big thing is just you want to mitigate the damage. You want to prevent the loss from causing further damage. So if you got a hole in the roof, call a roofer out, have them tarp the roof. You want to do as much temporary work as you can to prevent further damage from happening. You don't want to do anything permanent if at all possible. You don't want to hinder the carrier's ability to do their investigation, but you do want to make sure that you limit the damage from happening or damage from getting worse. So if it's raining out, you got a hole in your roof, don't just leave the hole or tarp the hole. Yeah. Keep it from rain from coming in the house. But mitigation is the big one, and doing the photos and video documentation along with mitigation will really make your claims experience much smoother with the carrier. All of that information will be really, really helpful for them and make your experience a much more smooth one.
Time for the game.
Okay,
so today we're going to play Should They File a Claim?
Okay.
So we pulled questions from Bigger Pockets where people asked for advice on whether they should file a claim. So I'm going to read these examples, and you're going to give thoughts on the situation from an insurance perspective. Are you ready?
I am.
Okay. I bought a property recently which ended up having flooding in the basement. I filed an insurance claim to fix and repair the basement. I am now having leaks in my roof. I had a roofer look at it, and he wants to replace the entire roof, saying that it has a lot of weather-related damage. Should I file another insurance claim for this? I want to buy multiple properties and rent them out. My concern is that my current insurance will drop me, or my future properties will have high premiums due to my past claims.
So there's a lot going on there. The first thing that comes to my mind is you want to ask your roofer, was that weather damage to the roof likely from one storm, or does it look like it's been happening over time? You don't want to, again, with the whole maintenance plan mentality, you don't want to file a claim to try and catch years worth of weather all in one claim. You're likely going to be unsuccessful doing that. Okay. So if your roofer thinks, hey, we had a storm that rolled through on this specific day and caused this damage, the damage is that much over your deductible, I would consider filing that claim. That seems like a valid claim to file. So you want to get their sense of, over time or a unique event. The other thing is, with there being a previous claim, how close are those two to each other? You really want to be careful about filing multiple losses in a really short period of time if you can avoid that. And so, if the previous flooding claim or the claim for the basement was relatively recent, and then now you're going to turn around and file a prolonged over time roof-related claim, that's something I probably would avoid, and I'd probably work with your contractor to see if you can get a good deal and repair that yourself.
Okay. Next up. One of my rental properties suffered water damage, and I'm wondering if I should file an insurance claim or just eat it. I've never filed an insurance claim on a rental property, so I don't know what the impact of filing a claim will have on my insurance rates for this property and other rentals that I have insured with the same company. This event was triggered when a pipe feeding the upstairs bathroom burst over the living room ceiling while my tenant was at work. So for hours, water rained down, damaging the living room ceiling, carpet, padding, and drained into the basement, damaging the drop tiles, insulation, and more carpet padding. It does not appear the subfloor or walls were damaged, and no apparent mold. It will be fixed for between $4,500 to $6,000, and my deductible is $500. I've also got a plumbing bill for fixing the pipe that is not covered by insurance. To file a claim or not to file a claim?
that one sounds sudden and accidental with a pretty substantial amount of damage. That feels like that's a valid claim. I would say what you want to make sure you do is understand how did that pipe burst in the first place, make the necessary adjustments and repairs, and maintain your property appropriately to make sure that you don't have a loss like that in the future. I think there's also an element of do I file now, and then what do I do to protect myself in the future? So that sounds like a valid claim to file now, and then also you want to have your mind to, now what do I do to make sure that doesn't happen again?
Okay. Last one, much shorter. I just purchased a property to flip. It was just broken into and the copper was stolen. Damages are about $1,000 over my deductible. This is my first house. If I submit the claim to insurance, will I have a problem getting coverage in the future?
That one's tricky. The damage is not substantially over the deductible. That's when I would consider just taking care of yourself, especially if you plan to continue to purchase properties in the future where you can see that this may happen. Because again, you want to stay out of the space where you are filing, either frequent similar losses or frequent controllable losses. And so you don't want to present yourself as an undesirable risk to a carrier. And so if you think this may be something you will periodically run into on future properties you own, because if you buy flip, you're not there and you don't get a chance to secure it in time, that's one I would probably consider not filing, just because the $1,000 you may get doesn't feel worth the potential risk of presenting yourself as an undesirable risk, especially if you're going to continue to buy properties and may continue to run into this issue.
Right. And adding on to that just a little bit, they can also reevaluate the deductible that they choose, because if they select a higher one, their premiums might be a little bit lower, saving money over time. So that could be something to think about too.
Yep. Especially if they're in that space where they're considering higher deductibles, that type of claim scenario is a perfect example to do that. Be like, hey, if I can afford this now, maybe I'll raise my deductible on this and all my properties, and you kind of reevaluate what your risk tolerance is across the board. And having losses like this is an example, a perfect time to kind of do that reevaluation. So the last I'll say as a disclaimer is all claims are unique, and all circumstances have so many unique aspects to it. Nobody who heard any of those examples should do or don't file a claim based on what I said, because that's really, in some ways, that's the fun of it, because every claim's unique, every circumstance is unique. That's why you really do want to trust a professional, like we talked about before, because everything is so nuanced. There really is no one-size-fits-all. There's no right or wrong answer or definitive answer when it comes to whether you should or shouldn't file a claim. So you really do want to find a professional, find somebody you trust who can evaluate the totality of what you're dealing with, and then have them help you make the right choice for your unique circumstance.
Okay. Very good. Thank you for joining us today.
Yeah.
We'll see you again soon. We'll continue to post new episodes every other Wednesday on NREIG's YouTube channel, that's NREIG, and on Spotify and Apple Podcasts at Insured Investors. You can also follow NREIG on Facebook and LinkedIn. See you later.